Hello, everyone. Good morning and welcome to the show. Glad to have you guys here on this Friday, the 19th of March, 2021. Thank you for tuning in. We're going to get started real quick this morning and we're going to open up the charts right here and take a look. Guess what? The Fed is going to let the SLR expire come the end of this month. So the first day of April. It's going to be April Fools, I'm going to tell you, because there's $500 billion worth of excess reserves that the banks are holding on their books that they're going to have to start paying off. As was hinted at and discussed in depth here, the Fed decided under political pressure from progressive Democrats to let the supplementary leverage ratio, SLR, exemption expire as scheduled on March 31st, the one-year anniversary of the rule change. The Federal Bank Regulatory Agency today announced that the temporary change to the supplementary leverage ratio, or SLR, for depository institutions issued on May 15th, 2020, will expire as scheduled on March 31st, 2021. So there we go. It's written in stone now. This could cause some sort of a market crash, starting at the first of next month. Because it's about $500 billion that they're going to start paring back. They're going to be selling treasuries, they're going to be selling securities, they're going to be selling, you name it. They're going to be selling it, the banks. So this is bad news for the markets. And, you know, the markets have been levered up to unbelievable highs right now. They're kind of like perched, you know. They could fall. And this could start it off, you know, could really start the ball rolling. And in fact, the news that this is going to happen is definitely going to have an impact on the markets right now. Let's take a look at the gold price today. Gold price is $17.36. It's going along kind of sideways here. It's been dipsy-doodling between $17.20 and $17.50, and it's at $17.36 today. Now, let's take a look at silver. Silver is $26.14. It's up 9 cents on the day so far. And so gold and silver prices are not being impacted that much. But you know, the silver squeeze is still on. On the COMEX right now, more and more people are standing for delivery. And it's squeezing. It's really squeezing the amount of silver that they have available out there for sale, which is an unknown quantity. I cannot get I've never, in the many years that I've been doing my show, I cannot get an exact number on the amount of silver available for sale. They keep that very secret, how much there is actually out there that they have in inventories that they can supply the market with. Now, see, there's a big difference. An awful lot of people get confused. They say, well, there's all kinds of silver out there being in silver inventories. And this is true. But the vast majority of that silver is not for sale. Like if Apple iPhones needs to make iPhones and they say, we need silver, and they pound their fist on the desk, they can't have that silver. It's being held in private hands. It's being held, you know, it's not for sale. The amount that's available and ready for sale comes from the mines. They smelt it into 1,000-ounce bars, and then they use those 1,000-ounce bars for everything. How many of those do they have in their back room, you know, that they can sell? They won't let you know. They won't let us know that number of how much they actually have left. My thinking is that big pile of silver bars, maybe it was a huge pile of silver bars there a year ago or whatever, 2 years ago. Now it's probably shrunk down and it's smaller and smaller, and there's less and less of those bars left. But they can keep this going as long as they have some still there. Even if the pile shrinks down to where it's just 100 bars left on the floor, they can still keep this game going. But if it runs out, and if it does run out, they're not going to tell you. They're keeping it secret how many they have left. If it runs out, it can run out suddenly. All of a sudden, there's none left. Boom. And then it would impact the silver markets. See, all of this silver running out business about, we're out of bars, we're out of coins, we're out of all this fractional silver that you buy. When you buy a 1 ounce coin, you're buying fractional silver. I know we use the term for fractional silver less than an ounce, like 1/10 of an ounce or whatever. But it's all fractional silver because they take these big 1,000-ounce bars and they form them into these 1 ounce coins and stuff. That's where your 1 ounce coins come from. When they run out of those 1,000-ounce bars, then that's the big shortage. That's when the whole industry's out of silver. And that's when you'd see the silver price shoot to the moon because there's none to sell. And I can tell you, when we had that big thing there last month, where all the silver dealers in America were short on supply, they had to dig into those 1,000-ounce bars to replenish all of that. I guarantee you that took a big bite out of how much silver they have left. How much do they have left? Well, they might be sweating bullets right now. They might not have that much left. And so if they get big demand coming in, they might completely run out of silver worldwide. And then all that's left then at that point is the silver that's not available for sale. Silver that's privately owned by everybody out there. And there's a lot of silver out there in that category. But they're not going to sell. Especially if they see the price shooting to the moon. How high will the price have to go before they'll start coming back in and selling back into the market? Gosh only knows. Gosh only knows. So let's take a look at crypto today. Crypto it's been running right around 1,800 billion. The industry over the past few days, it's 1,805 right now, and with a Bitcoin dominance of 60.7% and a Bitcoin price of 58,801. That's the Bitcoin price today. Bitcoin seems to be fairly strong, and it's holding up its price up near $60,000. 58,806. All the other coins, of course, they held strong with Bitcoin. Because Bitcoin is like, picture a circus tent, a big circus tent, And you ever seen them raise a circus tent? They always raise that big center pole first. And then they'll start raising the other poles up to hold up the tent. But it's that big center pole. When that big center pole comes down, the big center pole, the center of the three-ring circus comes down, then the whole tent starts to come down. And the whole tent will rise when they rise up that big center pole that holds it all. That's the way with Bitcoin, the cryptos. Bitcoin goes up, all of the other coins follow it up. And when Bitcoin starts to go down, all the other coins go down with it. Bitcoin is that big center pole of the circus. And basically what they've done here is they've created an alternative to the dollar. Bitcoin is, say, the equivalent of what the dollar is in cryptocurrency. It's the world reserve cryptocurrency. And what they've created here is like an alternative monetary system. All these other coins can be equivalency of like other currencies. So you got Bitcoin as the dollar. And you've got like Ethereum as say the Great British Pound, and you got these other coins like Binance coin could take the place of say the Japanese yen, and Polkadot is another. Like all of these are like the different currencies out there in the world. How many different currencies are there out there? There's a euro and yen and Chinese yuan and on it goes. But that's the way with the cryptos. You just can't have a monetary system with just one coin, Bitcoin. Just like you just can't have a monetary system with just the dollar. If it was just a dollar, if there was no Canadian dollar, no peso, and no yen, and no Swiss franc, and these other currencies, the dollar couldn't exist all by itself. And that's the way with Bitcoin. Bitcoin can't exist all. What they're creating is an alternative system, right under the system that's already running. There's an alternative here, and that's the cryptocurrency system. It's an entire system. And it's nearly $2 trillion now at this point. Comprehend that for a minute. This industry is nearly $2 trillion. There's no signs of them stopping it. I know people out there say, oh, they'll never allow that to happen. But it's happening. And there's no sign of them ever stopping it. And if it gets to a certain point, probably around $3 trillion for the industry or $4 trillion for the industry, they can't stop it any longer. You say, well, Glenn, why can't they stop it? They won't be able to stop it because it'll be too big. It'll become too big a part of the real financial system. That if they stopped it, it would make the real financial system fail. And when that happens, when you get an institution or anything that becomes too large to let it fail, then you can't let it fail any longer. Why do you think they've kept Deutsche Bank going all this time? Because they wanted to? Deutsche Bank should have went down ages ago. They're too big to fail. They would take down the full financial system. And cryptocurrencies is on its way to doing the same thing. It's becoming as big as Deutsche Bank. And if it fails, everything fails with it. And so at that point, these central banks and stuff, they can't come out and say, okay, we're going to ban this any longer, because they would destroy the whole financial system. And the financial system supports them on an individual level. It supports each and every one of them. And if the financial system goes down, then they're all in jeopardy. And they can't put themselves in jeopardy. They know better. And so cryptocurrency is getting almost up to that point where it'll be too big to fail pretty soon. At $1,805 billion. Soon it'll be too big. And we'll have to accept it as an alternative financial system to the regular financial system. An alternative financial system that's growing exponentially bigger. It's got the potential, guys, to suck up everything and become the financial system. And the other financial system to wither and dry up. What that looks like, I can't tell you exactly, but there it is. Dow Jones Industrial Average today is down 180 points. I know that the news about the SLR has got something to do with the Dow starting to fall off. They might be starting to front run what they think could be massive selling into the markets come the first of next month. Crude oil today, $59.65. So crude oil's falling off too. Let's take a look at bonds and rates today, and we're seeing the middle end of the yield curve rising today. The 10-year is still rising at 1.73, but only marginally. Oh, wait, no, it's rising. It's rising. 1.732, on the U.S. 10-year. Things are not looking good right now. Things are not looking good. And we could get really big trouble entering into the first of next month. Gonna have to wait and see, guys, but it could, we could actually get a market crash. Let's take a look now at the MOVE index, 70.48. And it's up 3%. So it's getting up. The MOVE index is getting up near where there's going to be instability in the credit markets. We're getting close to instability in the credit markets with a MOVE index of over 70. Dollar index today, 92.09 and rising. Of course, the dollar is going to be strong. When there's an awful lot of selling in the markets and stuff, dollar, everything, a lot of things have impact on the dollar, and this dollar is going to stay strong as long as there's deflationary impact. And that's what this is. Inflation, is hard on the dollar. But deflation, the dollar actually loves deflation, that supports the dollar. Thank you guys for listening to my show. Like and subscribe. Give me a thumbs up. Hit that notification icon and everything. And we'll catch you guys in the very next episode. And you guys have a great rest of the day. And we'll see you guys later. Bye-bye.